All right, thought I would share a couple of trades that I've taken today on pound dollar. So the first one was actually a short countertrend. The second was long. Now I'm not in this really strong move. I saw it happening, but I didn't take the trade. I was happy with the two trades that I've taken. I didn't think that we'd take out the lows of yesterday uh, from whenever we were back up at the highs of the day at around 3 o'clock. That surprised me. Obviously, you never know when those big 100 pip impulses are going to happen. And yes, it's in an area on the higher time frames that does make sense. But yeah, I mean that kind of move in 3 hours compared to what I'm used to, just it's a bit of a surprise. So let's go over the first trade. So the first trade was a short, and basically after the 10 to 11 candle close on the 1 hour, after making the new high of the day, made a new high of the day, sellers came in, and then I was looking for a pullback in the 11 to 12 that then would allow me to get into the trade with a good stop loss. And my main target was this 1 hour support. If we broke through, then great. But we'd reacted off of this area, and it was also 4 hour support. So I was aware that was my expectations, and because it was counter trend, I was just going to take most of the the trade off whenever we got into the next kind of area of support, especially with these wicks showing rejection and with how weak the US dollar has been recently. It made sense to just take the trade, take the pips, and get out. So why did I look for shorts whenever the higher time frame was long? Well, that is mostly down to the 4 hour and the daily. So yesterday, bullish, yes, but strong wick in an area after we'd broken the origin of the last pullback, which was the middle of the month. We were now in an area that eventually it would make sense that we would start wanting to pull back a bit more than what we already had. So something that lasts a day or two. So then it was like, well, what was the 4 hour telling me? Well, the 4 hour was telling me that we obviously had this area that was resistance yesterday. 4 hour, you can see the highs up at a round number. Resistance yesterday that basically we were able to have a nice drop for a good 12 hours into the origin of the impulse on the 4 hour. Then, whenever we had reacted off of that, we had a strong bullish candle, but that was followed by a bearish candle. Now, that to me is like immediate kind of signs of, well, it can't really be that strong of a move. And obviously, yes, we have the support here, but that's where I would want to be taking longs. If I saw a candle like this, even though it was obviously an Asia session, I would want to see how price reacted at the lows of this or even at the lows of this support. But then we had the 226 candle. So we had a nice impulse on the 1 hour. During the Asia session, price came back into it for you early risers. That was a nice area for buy low. We had a strong bullish candle 226. So that also made sense. That was the 526 candle, just made a new high of the day. Price pulled back to the lows, took out the lows of a strong bullish candle at the structure support, and then went long again. Now, why did I look for shorts? Well, to me, this candle 6 to 10 is a bullish candle, yes, but I'm looking at it as at structure resistance. It's a deep pullback on that 4 hour. There's a lot of wick. There's a lot of wick that shows me it's not like this kind of wick at structure resistance. This is a wick that prices has to go this low down in order to find value for the buyers. That then tells me that, well, time could be over. Like time could be up for the buyers for now. So I saw this because it was counter trend. What I wanted to see was a 1 hour bearish candle, then basically a pullback to the open slash high of that 1 hour candle or close to it to then allow me to take the trade, because that gives me like the best value for a short-term trade as possible is a pullback to the open/high of the previous 1 hour. So we had a bearish candle at high of the day at the start of the new 4 hour. So then we had a pullback 11 till 12 candle. I've entered around 1.4170 and basically put my stop loss above the highs at the time, which I put with the spread 1.4178. So around an 8 pip stop loss. And basically I was looking for price to get into these lows. This support first target was the low of the 8 till 9 candle, because obviously you've got the wick here that there's obviously some buyers coming in here that price hasn't been able to get all the way down to these lows. But that happened within the hour. And I was like, right, okay, well that's solid. That's a solid trade in my eyes. So I've then taken most of my profit off. So I've got the down, but then it's like, well, what's the overall momentum? Where are we in terms of the low of the day, etc.? Where are we in terms of the daily range? So to me, I was like, well, the reason why I'm taking most of my profit off here, because it's counter trend, also the 1 hour 50, we're at the lows of the day as well. This is the ultimate low of the day, 7 to 8 candle. It made a new low after the 10 to 11. These kind of, the amount of times that price makes a new low or a new high of the day and then goes back to it, just goes beyond it and then reverses, they're the key reversal areas. So I was like, well, what would I be doing if I hadn't have taken a short? Well, I would be looking for longs. What would I want? Because of what I think on the higher time frames, that we might struggle to get beyond the current high of the day, or if we make a new high of the day, it might just be like a kind of fake out, because by that time it would be the start of the kind of new 4 hour, and that could be the time that kind of creates the push beyond and then turns around and drops through. So 12 to 1 bullish candle. Now this was after I came back from a 2 hour break. So we had this follow through and then bam, created new support at the support area. So obviously we have structure, we have the area, but then it's like, well, it has been shown again that buyers have stepped in and been able to hold themselves for the whole hour to create a bullish candle at support. So then again, 1 till 2, last hour of that 4 hour, structure hadn't been broken. We hadn't closed beyond this support because it's basically connected to these wicks. So it's all this area here. This area here that you could see as support, that area, well, it's connected to this wick because that's part of the area that's created that support. So it's essentially an area this size that price needs to close beyond that wick to then say it's well and truly broken. Even then, it could do a fake out, break back in, you know that. But that's essentially what it was. So I saw this candle 12 to 1 coming in. Now 15 minute, we had the 12 to 1. So this was the 1 o'clock. We had this 15-minute resistance up here. So at the start of the new 1 hour, we pull back. This is obviously, this area here is the support. Again, it's an area, it's not absolutely precise. You're not always going to get absolute precise, because that's just not the way that it works. So we have this area. So I was like, well, the only reason that I would be taking a trade like this would be if we could pull back into it and then look for some kind of reason to look for an entry. Now, bearing in mind with the 15-minute 50 above price as well, which then says to me that this is in a reversal area. But because price isn't really respecting it, it's not really in a strong trend, and we just came in a counter trend move. I was like, well, I want to see some proof of buyers coming in. Sorry, just having some water. So you saw that I saw this candle. This candle was the last 1 hour, the last 15 minute of the 1 hour, the 4 hour. So I saw this candle, and I was like, right, well, 15 minutes, created new support. We've had a bit of an impulse. It's made a high, not closed beyond as a high, but made a high, pulled back, made new support. Overall bias is up. That then is saying to me, right, okay, well, it's the start of the new 4 hour. 10 till 2 has closed bearish, yes, but we're at structure support. So I'm like, right, well, I'll take the trade, and I've already had a nice sell. Obviously, not as nice as the one that eventually came, but a nice sell that followed what I thought, what my expectations were. And I've entered after seeing this candle and then the start of the new 4 hour. And my stop loss was at 1.4128. So just below here. So I just want to show the what 2 seconds, I'll check on my phone what the actual entry was. 1.4139. 1.4139. So my stop loss was 1.4125. It was 2.8, but I gave it a couple of pips for spread. That's how I work it. And my main target was these highs. Just high of the day. High of the day, the origin of the last push down. So 2.5, I just want to show where that is on the higher time frames, because I'm always about well protected stop losses. Now, this candle had just closed 1 till 2. It was sideways. In looking in hindsight, I could have had my stop loss at 1.4130, that kind of area. I could have had it maybe four pips less than what I actually did have it, 4 or 5. But you know what? I was more than happy to just, because what I was thinking that maybe it just takes out the lows of these 2 hours and then turns around. And I had just had that extra protection of the 11 to 12, which was just a couple of more pips below. So I was like, well, let's just give price that wee bit more, plus the spread, etc. It just makes sense. So that was the buy. Actually on the 4 hour, as well, you can see we were protected. Well, I was protected by the lows of the 4 hour candle as well. The low of that was 1.41266. So yeah, that was it. That was the reasons. I saw the 15-minute candle close. I saw the pullback. I saw where my logical stop loss should be, and I took the trade. Got most out at the highs. We obviously have this kind of area here. Then we have the reaction, which I took the short from, and then we came back into that area again to retest, which was where I took most of my profit. That was my expectation that I've put in my journal, that it was going to be most out at there because of where we were in the higher time frames. Now, obviously, looking at this, if only that I'd taken another short from the area that I'd originally taken shorts from, but I thought, well, we've already had a decent upward move in the morning, a decent downward move in the morning as well, and then another decent upward move in the kind of early afternoon. I was like, a fourth move, and this is the biggest move of them all. I just didn't see this kind of move happening today, but now definitely won't be getting in. It's beyond my entry hours, but also it's beyond the lows of yesterday, beyond the lows of the 1 hour. Just let it run, and it'll come back. Whether probably London session, it'll do something that allows you to get back into the trade. But yeah, I just wanted to go over those two trades today. You can see here on the 50-minute as well with my short, you can see that we actually got below this area here. We broke structure with this close. This close, 10:15 to 10:30, close beyond this support and then retest and then bang. And that was obviously the highs of the last candle. Came in, started the new 1 hour, got the liquidity, came back in, and then boom, dropped. And that's it. That's the premise of my trading. Obviously, yes, I have the indicators for whenever they're required and whenever I want to use them. It's not the be all and end all, but price action, the right structure, understanding the 1 hour, the 4 hour properly, understanding where you are in the medium, immediate, and longer term side of things, and what the range of the last 4 hour and the last day is telling you. That's where you're going to find the most of the information. It's very rare that I'm not having stop loss protection from at least the 1 hour. Whether it's the current 1 hour or what, it's still the 1 hour to me for the type of trade that I'm taking. I'm more than 95% of my trades are protected by that. And to me, that is much more important than really tight stop losses or really great risk to reward. Whenever you're basically taking the same trade and you're not having to take as many losses or break evens, which are then going to obviously psychologically affect you as you're taking more trades, because like it or not, we're not robots. We can't trade like robots. So you have to understand that and then just respect it and then give price that bit more to allow yourself to just take the best trades that you can using the 1 hour and the 4 hour. Anything below the 1 hour to me is simply timing that you don't want to force it. Just protect yourself, take the trade, have your expectations set, have your structure areas of interest, and then just let price do its thing.